Okay, we're back. Zoom threw me out again, so it's all right. We're gonna get used to this. So back where we were, um, when I got when Zoom crashed, we had 5,600 in net income, and we were going to subtract the dividends from that. Okay, so let me see here, equals 5,600 minus 1,900. So I think 3,700. So if you took all of this, so we started with common stock and we ended, so all of this is equity, right? All of it's equity. These two didn't change. So we really don't even have to include those. The changes are revenue minus expenses, and our expenses are both of these. So that's why I have the 27,700. So there's your net income. Subtract the dividends, you have 3,700. So I believe 3,700 is correct. Let's check our work and see where we're at. Okay, looks like it's okay. What is the amount of the net income for the month? Well, we've already found it. It's $5,600. So we needed that amount to answer that. So how much of the net income for the month was retained in the business? So 3,700, this is retained. We didn't have any increases in common stock. So retained earnings is the only equity account that was affected up here. Okay. So this is retained earnings, and the net income and the dividends, the net income, which is the difference between these, and the dividends all come out of retained earnings. So retained earnings is the net increase. So you get to use that number again. Okay, let's see if I'm right. Yes. So the amount of the net increase in stockholders' equity during the month is the same as the net income for the month that was retained. If we would not have sent out dividends, then our net income would equal, well, how all of our net income would have been retained, but we sent out $3,700 in cash dividends. So, all right, I think that's that one. Okay, we are ready to put together a statement of stockholders' equity. Okay, so I'm gonna go back up here, see if I got this one on here. This is okay, statement of stockholders' equity. Let's go ahead and highlight everything and stack it. Okay, and then we'll move this over a little bit. And if you go back to the intro, statement of stockholders' equity, I'm going to make a copy of this and bring it with us to this. Okay, so I'm doing a couple different problems than I've done before. So I'm just kind of making some different notes here. So here's what your statement of stockholders' equity is supposed to look like. We're going to put one of these together. Notice it has for the month ending. So we're going to use for the month ending June 30th. Okay, let's go ahead and highlight that, copy it, and bring it down to the label. Okay, since it has the word statement in there, then you're going to use for a period of time. Notice we have a beginning balance and an ending balance. So let's go ahead and get balances, the beginning and the ending put in. Okay, this is like a puzzle. Put together the border, right? Let's see what this says. Here's the net income. Here's the dividends. Here's the common stock. So this is the balance in the beginning of June. So we need to put 190,000 in common stock, and we need to put 1,570,000 in retained earnings. Okay, so common stock, 190,000 and 1,570,000. Okay, and then we're going to add a cross. Hope you can hear my dog snoring. Yeah, that's funny. All right, so I'm going to add this together so I have a place to calculate it. So we've got 190,000. We've got 1,570,000. And then we need to add those two together. Okay, we're going to add those two together. So the beginning of the month of June, we had 1,760,000 in equity. Okay, so let's see what some of the things that happened. Issuing stock, net income, dividends. This is going to become a pattern. Not every month do you issue more common stock, but they said something about common stock issued in June. So that's an extra 40,000. So we're going to get issued common stock, put it in, and that gets added to only the common stock column. Okay, so I'm going to put that in so I can keep a tally here. All right. And then net income, we didn't have to figure it. They gave us net income for June. Okay, net income, but they did give you the opportunity to put a loss in, but you can't have both at the same time. So net income, and I'm putting a 0 there, but it's taking it out. So it must not want that. All right, so net income is 115,000. And then we want to add it across. Okay, so this is going to be 0. I like putting zeros in because then you know for sure that nothing goes in there. What's cool about a formula in accounting is if you get it set up, you can just pull down from the cell above and it'll give that to you. And then the last piece is dividends. So it says that we paid out $26,000 to owners of dividends. So let's use the dividend label and put that in. And let's see the instructions, whether we put a negative in or not. So if a net loss incurred or dividends are paid, enter the amount as a negative number using a minus sign. So yes, they do want us to use, once again, it was 26,000. So negative 26,000, which makes this negative 26,000. And then we need to add down. Okay, we need to add down. And then we simply need to do the balances for the vertical balance. So this is 230,000. This one, retained earnings, had a beginning balance, had net income, and subtracted dividends. So I'm going to go ahead and pull that over. So now our retained earnings is 1,659,000. And total equity, you add it this way and you can add it this way. So I got 1,889,000. All right, so there you have it. Let's check our work for the statement. And then the last question here, why is the statement of stockholders' equity prepared before the June 30th balance sheet? So these numbers here, these balances, right? If we would not have ran these balances through this, and if we tried to put in these numbers for our common stock and these numbers for our retained earnings, it would not have balanced. Nope. You've got to wait until you're finished with your stockholders' equity statement in order to put those numbers in the balance sheet. And if you're going to follow me, after I do my stockholders' equity statement, I tend to put in to the balance sheet the balances in stockholders' equity. So I just do it right away. Okay, so because you need common stock and retained earnings as of June 30th are needed. Okay, so should be right. Yep. We're going to need these two numbers to put on the balance sheet to get it to balance. If you try to put in the beginning balances, you will never balance. Okay, this stockholders' equity statement has to be done before the balance sheet. And that's why we are teaching you what order these financial statements go in so you understand that. Okay. All right, we're ready to move on. We're going to put together an income statement. Okay, an income statement. So I'm going to go borrow the little income statement we use for our intro here. That's a balance sheet. There's an income statement. I'm going to copy it and bring it with us. And I think I've got an income statement here. So I'm going to try to throw this in where we can use it to look at it. All right, so we're getting ready to put together an income statement for the month of March. Month of March, we're imaging services. Fees earned goes in first, and usually fees earned is one of the biggest numbers on the list. Okay, we're going to put expenses in descending order, except miscellaneous will be last, no matter how much it is. So if you want to just pick each of those expenses, miscellaneous is last, and we'll put in the numbers. Okay. Okay, then we're going to need total expenses. So I am going to put my numbers in my spreadsheet here. Okay. The nice thing about doing it this way, once again, is if you make a mistake, it's easier to trace down. Here are my total expenses. That's adding up all of those expenses. Okay, so let me go back and make that happen. That is $382,500. And now I'm going to take the revenue and subtract the total expenses. And now we have net income because we have a positive number of 185,700. Let's check our work. So we went through that one pretty fast. Okay, you got to get used to this, and this is the very first financial statement that they make for the period of March, right? So this one would be made, and then the statement of stockholders' equity, then the balance sheet, then the cash flow statement. Okay, let's go to the next one, number 21. Here comes a balance sheet. Okay, here comes a balance sheet. So, okay, I've got one for 21 here. So this is going to be as of, we've got March 28th. Here is year 3, March 28th. Here is year 3, the next month, March 31st. Okay, it says financial information related to Ebony Interiors for February and March of year 3 is as follows. So you've got all these numbers and we're solving for retained earnings. Okay, so we're going to go ahead and put this together, and that'll be the last piece, and we'll back into it. So here's what I recommend. Make sure you use these numbers. Now this group has the newest on the right. Usually they put the newest on the left, so you really have to be careful. I'm going to put this into this spreadsheet. So we have cash, accounts receivable and supplies. Okay. Cash is 201,600. I wish this was Excel. I really do. So it would save me from having to put it in here, but that's all right. That's all right. So what do we got? 201,600. Okay, so our total assets. So this is half of the balance sheet, right? Okay, when we know one half, let's check it. Is that right? Yes, if we know one half, well, that's the other half too. Okay, so you can double check that. Now let's put the liability in. There's only one. Okay, so the liability is 51,700. Okay, and common stock did not change. It did not change between the 2 months. So common stock is 130,000. Okay, so let's put in the liability, accounts payable of 51,700. Now, stockholders' equity has common stock. It didn't change. Okay, so it is 130,000. Okay, we can back into retained earnings now. We can back into it, and here's how. If you know that this side has to equal 326,000, which is right here, okay, retained earnings is, here's my formula. Take the total and subtract the common stock, right? Take the total and subtract, no, take the total and subtract accounts payable. If you do that, okay, we have total equity of 274,300. Okay, these two numbers must add up to this. And now you can back into the retained earnings. So we backed into total stockholders' equity. Okay, we took the total and subtracted the liabilities. Here is the total equity. And then now we're going to take the total equity and subtract the common stock. And when we do that, over here, we have 144,300 is our retained earnings for that month. Okay, I think that's correct. Okay, we're going to turn around and do it again. Okay, so while I have my spreadsheet open, so here comes the next month. 342,300, 131,300. Supplies is 8,400. So here is our total of our assets, right? Yep. Accounts payable is 55,800. Common stock is still the 30,000. All right, so let's go ahead and put this stuff in. Cash, accounts receivable, supplies, accounts payable, common stock, and you can put retained earnings even though you don't know what it is yet. You can put the label in for a placeholder. 342,300. Accounts receivable, 131,300. Supplies, 8,400. Total assets, 482,000. Once we know total assets and we have checked it, then we know that the other half of the balance sheet has to equal that amount too. We know the amount of accounts payable, 55,800, and we know that common stock is 130,000. We can back in to total stockholders' equity by taking the total of half of the balance sheet and subtract accounts payable, and that makes total equity 426,200. And now we can back into retained earnings. So 426,200 minus 130,000 leaves us with 296,200 for retained earnings. Okay. Let's see here. What's the difference? Right? What is the difference? So here is the total of the balance sheet for February. Here's the total for the balance sheet in March. So it looks like we've had some growth, right? We've got more assets than we did before. We also have more liabilities than we did before. Our retained earnings has gone up. Okay. So let's answer the question. Determine the amount of net income for March, assuming that no additional common stock was issued and no dividends were paid during the month. Okay, so I think I have that over here. So let's think about this. This is stockholders' equity. Determine the amount of net income for March. So if this is March, now the end of February is the beginning of March. Yeah, the end of February. It's either February 28th or February 29th becomes the beginning. Okay, so we're going to take this number here, 274,300. Yes, 274,300. And and there isn't any dividends, so take out the dividends. Okay. And the ending month end of equity is $426,200. So let me see here. Yes. So this should equal the total equity we found in March, right? So then I've got a formula here that takes the beginning and subtracts anything that's over here, which would be dividends, and anything that's down here, which would be month end. So net income becomes 151,900. Now, if you have troubles with that, how do you find the net income? Once again, if this is 0 for dividends, right? Take the beginning, we subtract, okay, so we take the beginning. Let me see what I've got here. So it's G99. So we're starting down here. Here's the month end. We're going to subtract this. Okay, so these two, right? So these two minus this equals this. This plus this minus this equals that. We've got to go backwards. So this minus this minus this. All right, I know this is hard. You've got to have 3 pieces before you can find the missing one. Okay, so here's the formula for net income. It's the only reason that account went up. Okay, so we started with 274,300 and we ended with 426,200. So the difference between these two is that it is 151,900. Now, this next one we're going to assume that they paid out $41,900. When you pay out dividends, then that means you brought in more net income than you did before. Okay, because this hasn't changed and this hasn't changed. But we sent out some dividends, so we actually had more net income here than we did before. Okay, so there you have it. Some of this you kind of have to chew on a little bit. Let's get into this blank sheet business. Okay, the only one you're going to have to do is 1-4A. Now this is that grid. And we're just going to kind of take it as it comes here. I'm going to try to spread it across so you can see it. This grid is already done for you. So actually, I'm going to highlight everything and stack it. Okay, this is done for you. So you don't have to add anything or subtract anything, but you do need to keep track of what these accounts are. And now you're going to turn these account balances into these financial statements. Okay, so we're going to start with the income statement. Okay, the income statement is for the month of July. Okay, so this is the month of July. Okay, I'm really going to tackle this in a different way. We've got income statement, statement of stockholders' equity, and the statement of cash flows. We're going to put that month of July title in this one in 1, 2, and 4. Okay, so we're going to try to save a step here, right? So we're going to go down here and get for the month ending July. Okay, so we're going to put this in 3 of the 4. So we're going to put that in the income statement. We're going to put that in the statement of stockholders' equity. And we're going to put that in the cash flow statement. So I guess we do have one more cash flow. Okay, go ahead and go get the 1 day in time for the balance sheet. So it doesn't hurt to do this. Okay, so we want their year ends July 31st. No, this is for the month of July. Okay, so the month of July ends on July 31st. Okay, there we have it. Okay, now we need to refer to up here. So we're going to start with the income statement. Income statement starts with fees earned. Okay, the label is expenses. Okay, and then how many expenses do we have? We have salaries expense, rent expense, auto expense, supplies expense, miscellaneous expense. I'm going to put all 6 of these or 5 of these expenses, and we've already put the fees earned in. Fees earned is 156,600. Okay, so you want to put that revenue in. And okay, so this one's going to be, so we can go get these titles here. So the first one, and usually the most expensive, is salaries expense. Let's go get the labels. Salaries expense is the biggest. Okay, and then I think it's rent expense. Okay, and you can go up here and check it. So auto, supplies, and miscellaneous now. Auto expense. Supplies expense, and then miscellaneous. And we'll go up and get miscellaneous expense as the last one. And then we'll worry about putting the numbers in. Then we want total expenses. Total expense is, there we go. And we may need to use a spreadsheet to help us. So that's okay. Let me bring this back over just a little bit so we can help ourselves here. Okay, so this is one. All right, so I'm just going to get rid of this because we're not using any of it. That's okay. We're using the grid on here. All right, so I'm going to put revenue in here. 156,600. And then, so I don't have to scroll back up. Here's expenses, 60,000. 33,600, 14,400, 3,800, and 6,900. Okay, that'll help me with this income statement, so I don't have to scroll up and down. So 60,000, rent 33,600, auto expense 14,400, 3,800, 6,900. Whoops. Okay. 6,900, and now I want to total this for here. Total those expenses are 118,700. Now, when we subtract this, we'll have a positive number, which is net income. Net income. Okay, so then we subtract. And it looks like our net income is 37,900. Let's check our work. Here's net income. I'm going to label this net income. Okay, labeling it because I'm going to need it to go down to the statement of stockholders' equity. Okay, so statement of stockholders' equity, we're going to go find our dates. That's the first thing you do on your statement of stockholders' equity. You need your beginning balance of the month to go at the top, and you need the ending balance of a month to go at the bottom. So we want these balance titles to go in to frame our puzzle, right? We need common stock. What was it as of July 1st? So we're going to go up here and look. Common stock. Okay. It looks like that was a transaction. And this is a brand new month. So those beginning balances in your stockholders' equity is going to be 0. So 0, 0, 0 across here. Right? Yep. And then they issued stock. Okay, so we sold stock to the owner, issued common stock. And that's the first activity. And if we look at the grid, the common stock's 52,000. So we want to put 52,000 here and run it across. Okay. Here comes net income. We just found net income. 37,900. Okay, so net income. 37,900. Net income increases retained earnings. Okay, do we have any dividends? Okay, they say that dividends are 10 grand. Yes. So we need to put dividends in. 10 grand, and it makes retained earnings go down. Okay, so across here. And now we add down 52,000. Oop, one too many zeros. Okay. So we have 37,900. We're going to subtract 10,000 from that, so 27,900. And now we're going to add across. Okay, so if we have net income, and this is dividends, and this is common stock, we're going to add just these three here. All right, and that is 79,900. Let's check it. We got it. We need these numbers to go to the balance sheet. We need these numbers to go to the balance sheet. So go down to the balance sheet, put in common stock, retained earnings. Common stock, okay, and retained earnings. Let's put our labels in first. That sometimes helps. Retained earnings. Okay, and we just found those totals. Okay, common stock's 52,000. Okay, retained earnings has 27,900. And total equity should be 79,900. Okay, we don't know. Now let's put our liability in. Okay, liability is accounts payable. Back up to the grid. Now we're ready to start putting in the assets and the liabilities. So the liability is 2,800. Okay, that's accounts payable. You can add 2,800 and 79,900 to find out what half of your balance sheet is. So let me go back. I'm going to put 2,800 and now I'm just going to add these two. So this is total equity and this is liabilities. And I'm just keeping a little bit of a place to calculate something. Makes it a lot easier. So looks like half of our balance sheet is 82,700. So if that's half of it, the other half has to match. This is going to be total assets. So we're actually going to work these assets backwards if we want to, right? We know cash is our number one asset. I think we have accounts receivable and supplies. So yes, we're going to put those in, then we got to come look at the balances. So we have accounts receivable, supplies. So just putting the account titles in. Let's go find out what that balance is in cash from the grid. From the grid, it is 29,700. Okay. The accounts receivable balance, 50,600. And then finally, supplies. We could find it. Okay. So supplies is going to equal 2,400.